Hey everyone! Today we are outside recording, sitting here with Annie the dog. So if you hear some birds chirping in the background, that's why. I just couldn't resist sitting outside in order to work a little bit today. Hope everyone is doing well. This week we are getting into talking about taxes. So this is our last topic that you guys had requested to learn about during our distance learning. We're going to take a look first at what are taxes in the first place, where does this money go, and then what do taxes look like for the average citizens annually. So kind of taking a look at taxes through two different lenses, from the government perspective and then from the citizen perspective. All right, last couple of weeks we have covered loans, where we see that banking institutions and the government will loan people money in return for a contract where people are agreeing to pay back that money as well as a little bit extra. Okay, so that extra is called your interest rate or percentage of that principal borrowed. So if you borrow $1 and there's a 6% interest rate on it, you're paying back that person $1.06. Okay, so that's on a really small level. It's a lot more than that. It's usually thousands of dollars that you are loaning, but just to make it kind of a little bit easier. So what determines that percentage of extra that you typically have to pay back? That's going to be your credit score. Okay, how do you get credit? Well, credit is based off of how you pay bills, what kind of bills you have paid, and how well you've been able to pay back those bills. Okay. Also, we talked about banking and what banking looks like and how you can use banking to help get good credit and help take out those loans. Well, banking institutions were created to assist the federal government with economic activity, so we took a little look at the history of banking. I don't know if you guys can hear this, but I've got a really angry bird right now, just cheeping away. All right, so this week we're getting into talking about taxes. So, as US citizens, in order to be a citizen and in agreement with our federal government, we have agreed to pay taxes. We've agreed to taxes through our Constitution. Okay, so thinking about Article 1, which sets up Congress, it outlines the fact that Congress does have the ability to levy taxes. And we also agree to pay taxes through the 16th Amendment, which allows Congress to impose an income tax. So any money that you make can be taxed by the federal government. So, how do we structure our taxes? Well, you'll see taxes set up in a way where it's a proportional tax. So it's a percentage of income paid in taxes. This is going to be the same for all income levels. So if Terry pays 6% in taxes, Missy is also paying 6% in taxes, no matter how much you make. We also have our progressive taxes, where the percent of income paid in taxes is going to increase as income increases. So Terry, who makes $50,000, is going to pay 6% in taxes, whereas Missy, who makes $1.2 million, could pay up to 20% in taxes. So again, that percentage is increasing the more you make throughout a year. We also have in our country regressive taxes, where the percent of income paid on taxes increases as income decreases. So this is typically your sales tax, where someone like me who makes, below $50,000 a year is going to pay a bigger percentage of my income than someone who makes $1 million a year based on the same object. So we see taxes happen at a couple of different levels. We see taxes at a federal level, state level, and local level. So money is taken out of either our property as we're paying on property taxes or our income or the sales tax. All of these different little taxes that we see in our world are going to different levels of government. So let's take a look at federal first. The federal government, from our income tax, is typically making up 45% of revenue. And again, our income taxes go to the federal government level. The amount of federal income tax that you owe is going to be determined annually or every year. Okay, so every year the federal government is taking a little bit out of your paycheck and it's going into the funds for operations. So sometimes if they overestimate how much you owe, you'll get a tax return after filing in the spring. If they underestimate how much you owe, you will have to pay more to the federal government. Okay, so employers are the ones who are responsible for setting up that system, for either taking out that tax every paycheck or waiting until the end of the year for you to pay it, and that's a little bit more responsibility on your shoulders. So when you guys get hired, make sure to double check with your employers how they have set up their tax collection system. Are you having money taken out of every paycheck, or are you going to have to set aside money on your own to then pay into taxes at the end of the year? All good things to ask. Okay, employers are also setting up, if you are having money taken out of your paycheck, for Social Security, Medicare, and unemployment. Also, you should know corporations are paying taxes towards federal government as well. It's not just individuals. So here in the United States, our federal income tax is a progressive income tax. So the more you make, the higher percent of tax rate you're going to have. So taking a look at this chart, if you are a single person, so you're not married, and you make a little bit under $10,000, you're going to pay 10% of that towards the federal income tax. Whereas if you're making easily over $500,000 or more, you're paying 37% of that towards the federal income tax. Just because I always get questions about this when I'm teaching in person, where does that money go? How is it broken down? Here's a couple of quick charts to help you understand where that money is going towards and help you a little bit understand why our government works in a deficit as well, where they are spending more than what they're receiving. Okay, so if you have questions, definitely look up federal spending and revenue. It's going to help you break down, where's my money going? How is it being used by the federal government? And these charts, this data is going to be released to the public every year. Okay, so you can see, looking here on the really colorful chart on your left, the revenue for the federal government was $3,472 billion. And then as a country, we're also spending $4,472 billion. So like you see, we're spending more than what we're receiving from citizens. And then you're able to see that major breakdown of where things are being spent. So Social Security, Health and Human Services, Department of Defense, all of those different things are using our federal tax income. Okay, so now taking a look at our state and local governments. Okay, so states have to organize their funds, just like families do. So when you're organizing funds at the state level, you have to think about your operating budget, so your day-to-day things. Are you paying your employees? Are you paying for electricity and gas in all of the state buildings? And then you also have to account for the capital budget, which is your major investments like new buildings, new bridges, fixing roads. Okay, all of that stuff has to be accounted for and thought about when creating your annual budget. Our governor is the one who is going to prepare that budget, and then our state legislature has to approve that budget. So again, keeping that checks and balances even at the state level. If the state legislature does not approve a budget that the governor has created, this is when we see government shutdowns occur. That means that the previously approved budget has run out of its money, and we don't have anything new approved to start paying off different things. States are able to generate funds from its citizens through a couple of different ways. So again, states are collecting money from citizens in our specific state that go towards that operating budget and capital budget. So we have our sales tax. In Michigan, this is a 6% sales tax. So when you go and buy a candy bar for $1 and you walk up to the cash register and they tell you that the payment is $1.06, that's why. So for every dollar, you're paying 6% in taxes that then the state of Michigan collects and uses towards those operating budget, capital budget things. We also have a state income tax. In Michigan, this is a 4.25% flat tax rate. So whether you're making $1 million a year or $10,000 a year, everyone is paying 4.25% in taxes. We also have licensing fees in Michigan, and this is another way for state governments to make money. So when I went to get a license from the state of Michigan to become a teacher, I had to pay money in order to get that license. Even though it doesn't cost much to fill out paperwork, they're still collecting money and revenue to go back into state projects. Local governments also have taxes in place to help keep some major programs up and running. Programs that more local governments have to operate are our public school systems, law enforcement, fire, county buildings, those kind of things. Rec facilities, transportations, elections, public health, record keeping, social services, all are operated at the local government level. So if you're thinking in Calhoun County, we have a county building there in Marshall. It's just kind of southeast of the fountain there. The people who work in that building and for that building are able to help provide us those services based off of local taxes that have been imposed. Those taxes are typically seen through property taxes. So however much your house is worth, you pay a percentage of that towards local government. And most of your property taxes really do go towards the school. Schools get money both from local levels and also from the state levels. So if you ever hear the principal say, make sure you show up for count day, that's why, is because the state is able to determine how much to allocate to each school based on the number of students that go there. Okay, property taxes are typically split up into different communities, and this is going to, these are like your local areas or your townships. So if you have like Emmett Township or Marshall Township, the city of Marshall, Albion, the city of Albion, Albion Township, Burlington Township, all of these different little districts are then allocating money back to either the school districts that operate for their students or different social services that help with that. So there we go. So these different townships are all pulling together money to then provide to the schools in their district or social services that are occurring within the district. So how do taxes look to citizens every year? So now we know what taxes are and how they're collected, but what does this mean for you out in the real world? Well, the Internal Revenue Service, or the IRS, is an agency within the Treasury Department, and they are the ones who are interpreting and applying federal income tax when policies have been passed down by Congress. So they're determining how we collect money, when we collect money, And these are the guys who will come after you if you don't pay your taxes. So when you're hired, like I said, employers will have you fill out a W-4 form to help figure out how much money to have withheld from your paycheck or taxes. So when you get hired, sometimes you can opt to have it taken out of your paycheck each month or every other week, or you can have all of your money up front, save it off to the side, and then pay one large lump sum for your income tax annually. Just depends on what level of responsibility you want to have in managing your money. Typically here in the United States, we say that tax season runs from January to April 15th. So on January 31st, employers are required to send you a W-2 form. You want to make sure to save these when you get these from your employer at the beginning of the year. A W-2 statement is going to show you how much money you have made within that last year during that term of employment with that company. And it'll also show you how much was withheld in federal and state taxes, and you're going to need these in order to file your taxes during tax season. Okay, you're going to get those once you file your taxes. You typically get a return if you've paid too much into the federal government within 3 to 4 weeks. Obviously, this year things are a little bit different, and we have had our tax season extended into July, just in case citizens are struggling with different payments, things like that. So how do you file taxes? Once you get your W-2, where do you go next? Well, you can hire someone who specializes in taxes. These are accountants who have gone to college and know different laws, different ways to specifically accrue your money and make sure it's all accounted for. They'll help you determine if you have any tax deductibles as well. They're well versed in laws. So if you have any children, if you have donated things throughout the year, all of those are different tax deductibles. So make sure that you are taking a look at some of those things. You can always file your own taxes as well. A great website that I know I use is Free Tax USA, where you just need to make an account for free. You will have your W-2 with you in hand, and it will just ask you to input different numbers into the fields that it asks about. It'll ask about your life a little bit, like are you a renter? Do you have your own home? Do you have any dependents? So that would be children or maybe an elder who's underneath your care that you spend money on. Okay, but both ways are great ways to file your taxes. Now I did want to show you guys what a W-2 looks like. So that way if you get handed a paper from your employer in January, you don't just toss it going, well, I don't know what that was. So this is what your W-2 is going to look like. This is obviously one from 2014 and it's a sample W-2. But they're going to show you all the different boxes are labeled. So again, making it really easy if you want to file your own taxes. But it's going to show you the company's name, location, your name, your address. It's going to show you how much you made throughout the year, how much was taken out for federal income tax, Social Security, Medicare, all of these different things are shown on your W-2. And this is what the government is going to use in order to determine, has this person paid too much throughout the year? Have they not paid enough? And that's when you may get the results of, oh, I'm going to get a tax return, or I need to pay a little bit more into the federal government, state government income taxes. So hopefully this helps you feel a little bit more comfortable about once you go out and get a job, filing taxes are not a scary thing to do. I pinky promise it gets easier every year you do it. If you aren't comfortable with it, there are options, there are people to ask questions for. So just make sure to ask for help as you go. So that's all I got for you guys. This is our last video of the year. I hope that you are somewhat enjoying the nice weather, but as always, reach out with questions if you have them. Even after you graduate, please feel free to contact me or any of the other social studies teachers. We would be happy to help you understand some of these personal finance things, questions that you have about government or economic policy. We're here to help.